Hi, welcome to the Market Alert for Thursday, the 27th of February 2020. So, dip buyers battered as stocks, bond yields and oil plunge intraday. This was yesterday's news, and certainly from the open yesterday. We'll start with the intraday chart. Prices moving lower over or just under 600 points initially, and then making its way back as the plunge protection team came in and assisted with moving prices higher, and then initially also moving higher in the main session there. Again, you can see a big ramp up to start off with 200 points in the first 10 minutes, and then 50% retracement before we had another 200 points move to the upside. Then we had a 76% retracement, and then it was just downhill as the market then saw the buyers coming in. And this is going to be an interesting dynamic now, because the futures market's generally being pumped to the upside. The sellers coming in, that's the pattern we've had for months. As the futures market does the cash sellers a favour, they can get out of their stocks and their shares as they ramp prices up in the overnight market. But unfortunately now, there's a certain amount of panic that seems to be moving, and as you can see, overnight prices continuing to move lower and currently down. If we look, it's about 300 and some odd points. I think let's just have a look. 455 on the futures, 300 and something on the cash there. So yeah, prices down, finding a bit of support at the moment. May get a bit of a bounce as the European markets open, and then probably get battered once more, or it will move to the downside and then come back. I know it's stating the obvious there, but it just depends how the market's going to react to the fact that it's down significantly on the overnight. And the reason I'm saying this is because when you look at the daily chart, even the buying pressure for yesterday, which is massive, hasn't held the market. It's continued to move to the downside there. And in the weekly chart, to get a bigger perspective, you can see it's straight down. We've got some support here, and this is only back to October, so it's no big deal at the moment. I mean, these are August lows, and then we've got May lows. If we get to January lows, that's when you really want to start worrying, or the weekly chart gets back to the 200 MA there. Let me just compress the chart a bit and have a look, see if it's ever got back to the 200 MA. It did way back in September 2015. I mean, you want to worry if it gets down to these levels, which would then be a problem. I'm not saying that it can't, but again, if we go back to here, which is, so I'll give you the date, December 2018, when they tried to taper the balance sheet. They soon brought the market back. A phone call was made to all central banks, and prices were then brought back. Have a look at the market alerts on YouTube from this time, and you'll be able to see the precise details of what happened here. So we've got a long way to go at the moment. So if we were to hit this low to where we're currently trading, is 5,000 points lower. So we'll see what happens going forward, but there is some weakness around at the moment. But we could see, as I said today, we could see another buying pressure bar with a move back to the upside if they decide to come and assist. If not, then we're going to have a look at the support over here, which will be, I'll just drag this onto the chart just in case it's required. The next downside targets are not that one. Let me just rescale the chart. There we go. So we've got this one here, and then we'll have here, and then down to the January lows of last year. So that's where you would be looking for some sort of support should prices continue. It depends whether they want to allow them or not. But the coronavirus isn't going to go away just yet, that's for sure. So it could be all sorts of problems going forward. And implied volatility off a bit yesterday because there was some buying pressure around at the time, and then the market's been on the on the skids overnight. So this down just slightly. This has got more room to move higher. 28 would be the area of 100%, and where you'd find some sort of pullback and some sort of froth coming out of the market. But at the moment, incredibly frothy there. And yields also higher. Sorry, the same price as yesterday, minus 0.0. Sorry, minus 0.20 is where we are for yesterday, which I'm surprised. I thought we'd be heading down towards these record lows, but there's plenty of time for that. Okay, that will do it for this one. Let's see what happens today as the markets unfold with the current situation of prices continuing to move lower. That'll do it for this one. Thanks for watching. See you in the next one.